What folks? Back at it. I usually, it's the market, right? We talk about market open for the New York Stock Exchange at 6:30 in the morning. And usually I do my messages before market open. But it doesn't really matter when we do it. As long as the information is accurate and we're dealing with the truth here, any time is a good time to hear the truth. Social media is like a big cesspool full of garbage. So I'm honored and privileged to be able to be one of those ones, right, that you should be listening to. Yeah, very cocky. Yeah. But what I want to talk about this morning is the stock market versus the metals market, but specifically the Russell 2000 versus gold. Because I could talk about the S&P 500, the temperature check, the breadth of the market. You want to deal with the S&P. But if you want to deal with something that's less volatile, right, then you go to the Russell. I had to get my feet wet to understand this, okay? If we want to do it by levels, the Russell would be the least volatile, then the S&P, and then the Dow Jones and the NASDAQ kind of go together, but I would say the NASDAQ is probably the most volatile, right? And in metals, gold is the least volatile, and silver is already more volatile than gold. So if you want a better measure of metals, you want to deal with gold, right? That's why I'm using the Russell with gold. Supposedly, when there's fear in the market, gold will go up and the stock market will go down when there's fear. Right? But today, everything seems to be pushing in an upward direction. I mean, are we melting up? It could be a melt up. That's what we're going to see in the long run. We're cutting interest rates. It's quantitative easing. It's an easing cycle. That means we're lowering interest rates and we'll be printing tens of trillions of dollars. And when they print those tens of trillions of dollars, they're not just going to sit there and look at the money. They're going to spend it on whatever they want to spend it on. Whenever you spend money, you're spending it in the market. What market? All markets. Tens of trillions of dollars going into the market, a hyper push of liquidity, which raises all ships. So that's what we're dealing with. Are we in agreement here? So the markets are going up. Oh, where's the Santa Claus rally? Oh, is this not a Santa Claus rally? I already told everybody. The Santa Claus rally don't mean Christmas. That's what we said. Now the markets are just pushing up and everybody's like, how do I get in? You're supposed to get in during Christmas. Oh, we don't think there's going to be a Santa Claus rally. I love my job. I really do. I love my job because clout chasers can chase clout. Predators can prey on whoever they want to prey on. The truth is sitting right there in front of you. Everybody says they want the bag. That's why I act the way I act. I be clowning. I got to pull the clown suit out. That's what I do. I'm not the clown. They're the clown. But let's get to the numbers, right? Because people say you can't call tops and bottoms, OG. How many times do I call tops and bottoms? I'm not saying it's going to stick. I'm just saying whenever there's a top, I catch it. Whenever there's a bottom, I'll catch it because we're using the basic scale of 100. We haven't seen a bottom. The bottom was back in December. Now it's all tops, right? So I catch the top, it comes down, I get out, take the profits, and then I find another top. How do I know where the tops are? Oh, we don't know where it's going. These are all-time highs. There's no candles up here, so we don't know. No one, your mentor, these gurus, they can't tell you where the top is. I'm constantly telling you where the top is. It's the basic scale of 100 will tell you where the tops are. You can catch them, take your profit, get out. Catch it, take the profit, get out, and keep going up and up and up and up and up, and then come down and go up and then come down. Buy low at a discount, sell high at a premium, and stay out the middle. I'm telling you, I'm the only channel on social media that is telling you this. They'll tell you everything else but this. I developed the concept. So let's go down the middle. Russell 2000. We're looking at what's called the smaller picture, right? Going into the microscope, because the big picture is 2850, 2750, 2650. The premium, the point of interest, and the discount. That's how I knew the other day when I caught the top at 2700, I knew it wasn't going to stick. You see my profit levels. It's Smurf Village. You don't see red because there is no red. You can't manipulate a MetaTrader account. You can't manipulate the account. You can't delete anything. This is Smurf Village, all blue. OG doesn't show his losses. There are no losses. And you see why I love my job. No one's doing what I'm doing in the world. I'm saying I'm the best in the world. And I'm teaching it. I'm handing it out for free. It was handed to me, so I hand it to you. And let the people decide who's the best. And forget about who's the best. It don't matter. As long as you're able to put money in your pocket, save yourself and your family. That's what I want you to be able to do. So I give you as much information as I can so you can do that. Back to the numbers. Now, we saw that the big picture is 2850, 2750, 2650. I'm supposed to buy at 2650. It's not at 2650. It's going to 2750, and 2750 is the middle. 2850 is a top. Not the top, a top, a very good top, because it's the basic scale of 100. You want to get up at 2850. Doesn't mean it's going to stay. It just means that that's going to be it for the moment, right? But it's definitely not, you're not selling at 2650. You can sell at 2750, but you have to understand the concept that you're in the middle of the structure. What structure? There is no structure. It's all-time highs. There's no candles up there. It's the basic scale of 100. I got to beat people over the head with it, right? You just do, because they too busy paying attention to the clown show that they can't understand what's sitting right in front of them. So that's where we are right now. I do videos every day for the specific purpose of to just continually go in and look at the numbers, because the numbers will not lie to you. Men lie, women lie, but the chart don't lie. So that's where we are with the Russell. And as you can see, I caught the sell, the sell for now, right? Because it's going to go up, right? We're going into a melt up. Once the money starts getting printed and they start putting the money into the market, 2850 really is at the bottom. 2500, that's the bottom. 8,500 up there. That's where the Russell's going because markets are meant to go up. We are really at the bottom right now, but I can't buy right now. I have to sell from 2850, and maybe it'll drop down to 2150, from 2850 down to 2150, and then I can buy, all right? And then go up another level. You have to learn the basic scale of 100 before this even makes any sense to you. And we haven't even got to gold, and I'm almost at 10 minutes, so I guess I'm going to have to cut it short. Because you missed out on gold is the point I'm really making here. You can't buy gold. You don't want to sell gold. You don't want to go against the grain. You're going to get wrecked if you try to sell gold. So you have to wait for a pullback on gold, and you probably won't get it, which is why I'm talking about taking sells on the stock market. This is not trading or investing advice. It's just better if you try to catch a sell on the stock market, because gold is going to keep going up. They're revaluing gold in the metals. So for the people, not the profits, Consistency and persistency that wins in the market. To beat the market, you must become the market. The market moves with integrity through its price. And if you lack the integrity of the price, you get wrecked. You go to loss review, complaining about psychology. If you're taught by clowns, you're going to try to impersonate a clown, and the result will be a clownish result. Hey.